Morning, Steve Free in Chicago with the morning grain comment. So happy Friday to everybody. Interesting week. Prices for wheat's down about 15 cents, while corn is down 4 and wheat's down a half a cent. For the month of October, wheat's actually up 21 cents, corn's down a penny, and beans are up 27 cents. So for the month of October, what we've seen, number one, is wheat prices rallied because of higher Russian wheat prices. And I think most of that is because of the lack of farmers selling over there and a little bit of export business in the Black Sea. Overnight, wheat's taking some profits, and we'll see if we can sustain these prices. I think most people think that wheat prices probably need to work a little bit lower given the prospects of a 2020 global record supply outside the United States. As far as the corn market is concerned, we continue to be trying to establish a price in a pretty broad trading range between decent corn at $3.80 and $4. Lower end of the range could be because of the approaching harvest, and we just don't have a lot of export activity. The higher end of the range could be because the market's concerned that the U.S. crop is smaller, and that the carryout is going to get smaller, which will demand higher prices down the road. And as far as the bean market is, we're in the 8th session of consolidated trade. I think the market is very confused as to, number one, will the Chinese come in and buy more beans? And number two, we're watching some dryness in central Brazil and wondering if that's going to affect crops down there. As far as South America is concerned, right now in Brazil, we've got about 56% of the crop planted, the first crop, the smaller crop, versus 71 average, and 33% of the crop is rated good to excellent versus 51 normal. So that central area drying out is causing a little bit of late planting and lower crop ratings. Farmers down there have sold about 37% of the crop, 37 million tons of the crop, and the export commitments are about 35 million tons. Some focus will be on Argentina with the elections. The leading candidate would increase export taxes. That would increase the price of Argentina products for export and lower the price to the farmer. Farmer right now has sold about 38 million tons of the soybean crop versus 33 last year, and export licenses of about 9 million tons. They've already sold about 6 million tons of their new crop beans versus about 2 last year. So that could have some impact on their export liftings and also on prices. So we have to watch that pretty closely. We've also noted that December soybean oil around 31.50 is the highest since February. We're following higher palm oil prices because of the increase in biofuel inclusion policies in Malaysia and Indonesia. So we'll see if that has any impact on things. So anyway, here we are, beans in a trading range, corn in a big, broad trading range, wheat taking some profits. I think we need a new catalyst to move prices one way or the other. It might take a while to get to the November crop report, but more importantly, we'll watch kind of the money flow and see if anybody buys into the fact that China's going to come in and buy U.S. ag goods, and that's going to prop prices higher. If not, harvest pressure could probably push us a little bit lower. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.